Hello everyone, welcome to the Economist Diary. If you're new here, I'm Olivia, a high school student. If you're old here, then welcome back. So in this video, I'm going to talk about the economy in China, the European country, and the USA. So if you're interested in this video, please keep on watching it. Let's talk about the China economy first. Last Sunday, China has announced that starting from the 28th of August, the stock transaction fee is halved, adjusting from 0.1% to 0.05%. So how does the stock market go after the new policy is released? As of Friday, the Shanghai Composite Index is up 2.26%, and the Shenzhen Component Index is up 3.29%. But trading volumes shrink significantly on Friday. It indicates that even the policy is used to encourage people investing more money into the stock market, but the purpose hasn't been achieved yet. And other two news about Chinese economy are on the 31st of October. China reported that the August PMI was 49.7%, 0.4% increase than the previous month, but still below 50%. On the Friday, on the 1st of September, People's Bank of China cut the foreign exchange deposit reserve ratio of financial institutions by 2%, which can ease the pressure of future depreciation of the RMB in the short term. And the US also has reported many important data and index over the past 2 weeks. Let's talk about the speech first. Last weekend, the US Fed Chairman Powell spoke on the Jackson Hole annual meeting of global central banks that lower the inflation to 2% will be and will continue to be the aim for Federal Reserve to control the inflation. The Federal Reserve will keep on taking action till the inflation achieves their expectations, and the PCE will be the key point for their observation. So, how was the PCE in the second quarter? The core PCE index annualized rate is 3.7% in the second quarter. It's 0.1% below the previous month. So we could see that the US is still making the process in lowering inflation rate. And on Tuesday, which is the 29th of August, the US released the CPI in August, which is currently 106.1 comparing to the previous date, which is 117. We could see that the purchasing power and demand in the US is slightly decreasing. Additionally, the JOLTS report shows that there are 8.827 million vacant occupation in July. Considering the data was around 9.5 million in the previous month. People are wondering if this indicates the sign of normalizing labor market in the US, or is it caused by the significant decrease in non-farm payrolls in June and July? Some of the data shows how it goes. For example, the number of ADP employment is 177,000 in August, which is 324,000 in the previous month. And the annualized rate of GDP in the second quarter of the United States was 2.1%, 1.3% lower than the previous quarter. So above all, from the decline in both data, we could see that the current labor market in the United States has clearly begun to normalize. And the US has also reported the non-farm payrolls in August, which is 187,000, same as last month, and are all above prediction. You may think the data is kind of high, but it actually being trained. is in a trend of decreasing for the past few months. And in addition, the labor force participation rate is 62.8%, 0.4% higher than the previous data. It also shows that the labor market is cooling down as the unemployment rate is decreased, showing that the demand of labor isn't as strong as before. Besides the America, there are many other countries in high inflation situation. For example, the Germany and some of the European countries. On Monday, the 28th of August, the Eurozone reported an annualized rate of household loans in July, which is 1.3%, 0.4% lower than the previous month. And the M3 in July is around 50 trillion euros, down 0.4% from the previous data. These two could all demonstrate the fact that the Eurozone is still in a phase of inflation and is rising their food price and other prices. The Eurozone reported a preliminary HICP of 6.2% in August, decreased by 0.4% than the previous month. Also, the unemployment rate is 6.4% in July, keeping unchanged. Last but not least, Germany's current inflation pressure is still much higher than the United States. We could see from the preliminary CPI annual rate in August, which is 6.1%, lower than the previous value of 6.2%, but still it's kind of high. So based on the above data analysis, China is currently in a situation of overall shrinkage in real estate, foreign trade, and domestic consumption, and has been stimulated by a series of policies. So let's see how the situation will be in the future. The current labor market in the United States has cooled, but the labor force participation rate is still very high. To speak of, the annual growth rate of average hourly wage is higher than the current rate of inflation. So with the Fed target of 2% inflation, the environment of high interest rates is likely to persist for a long time. The US is unlikely to implement an emergency rate cut unless there is a systemic risk in the financial system. So that is the end for today's video. Hope you guys will like it. Don't forget to like, subscribe my channel, and comment below. See you next week.